Alright, hello everyone. Today we're going to be learning about liquidity. This is the first ICT video that I'm making for my little series that I'm going to have. So before we get into it, let's just talk about some things. So if you're new to trading, there are trends in the market, and two of these trends can be a bullish or a bearish trend. A bullish trend is when the market is going up, and a bearish trend is when the market is going down. So, that being said, there are highs and lows that get created in the market because the market doesn't just go up all the time in a straight line. The market doesn't just go down all the time in a straight line. Now, there's patterns for these things, and as you can see in these two images right here, we have them. So a low, we have a 2 candlestick pattern that forms with a bearish and then bullish candle. So it would be like this, down then up. That creates a low right here. Down candle, up candle. Then we have a high, same 2 candlestick pattern, basically just flip-flopped. So we have up and then down, which creates a high right here, up and down. Okay, and here we are on the NASDAQ E-mini futures. Today we're going to be going over liquidity mainly. So let's go over what liquidity is and where it lies, and then we'll go through some examples. We are up here now. I'm going to create some examples for you guys to basically show you how the market moves. Alright, pretty shitty example, sorry. But, okay, so we have our 4 examples right here. So, what is liquidity? So, they are resting, stop, limit, and market orders above highs and lows. So basically above every high and low in the market there is resting orders, because that's where people have their stop losses. They have their actual orders in there, and smart money comes in and takes out those orders as a liquidity sweep and then reverses or continues higher. In an uptrend, main thing we're going to be looking for is these lows right here. I can anticipate price will sweep out these lows. On a downtrend, I anticipate price to move up and take out these highs. And then during consolidation or accumulation, price could take out any one and reverse in the other direction or continue. Now, let's go to the market and identify the difference between a liquidity sweep and a run through, or just when it keeps going. Okay, here we are on the 15-minute time frame. So we have some accumulation right here. We have these equal highs. And we have these equal lows. So now that we see this, let's wait for price to sweep one of these sides of liquidity and see what happens. Okay, so right here, price sweeps the side of liquidity, also tapping back into a PD array. See what happens next. I can anticipate price is now going to move towards this high right here, considering we swept out this low. And what does price do? Takes out this high now. Now my next focus is going to be on this low right here. The reason I say this is because we were getting rejection out of this high. So let's see what happens. So price fails to break down below this low. So I can anticipate that we are going to keep moving higher. As you can see, if we come over here, we have some resting buy side liquidity up here that we just swept out. We displaced above it, but we are getting huge displacement out of it. See what happens next. Okay, so now we start to get some rejection from it, and then we've finally moved past this new high right here. So where am I looking now? I'm basically looking at these lows right here. Only reason I say this is because of all this wicking and little displacement, barely any, that we got from this high. So I'm anticipating price is going to move down into here. And just a little bit, price takes it out. Some little choppy. Okay. And price takes it out. So takes it out during New York AM session. But what can we also anticipate here? The reason this happened. So we have this old high that got formed. We sweep it and we show huge displacement out of it. We reject it again, only wicking it, and then we move down. This can get into daily profiles with the Asia, London, and New York session, as long as the power of 3, but we'll get into that in another video. So basically, price, to review, price went up, took out the liquidity, and started displacing in the opposite direction, causing it to be a liquidity sweep. So let's look at another example. Okay, here we are. Looks like the other example, but it's not. So let's see what price does while we are accumulating. Okay, so price takes out this high right here. See if we get more rejection out of it. We have this big wick right here, but we have displaced and closed through it. So let's see. Okay, we get a huge drop off, which I expected to happen because we were anticipating for price to come down to this low right here. Okay, and what happens next? Let's go back a little bit. So in this next candle right here, price wicks all the way above this new high, takes it out, and shows huge signs of reversal. This is a huge liquidity sweep right here. Completely took all of it out and just rejected straight off it. You can anticipate price is going to go down further. Now, say I would want to enter. I can use my projections and see. We can see if price actually wants to go down to these. Okay, I have no clue why my projection lines aren't working, but we can see what happens. If it ever hits. Sometimes they don't, sometimes prices just choppy. Okay, so right here is a great example of another liquidity sweep. So this old high right here that got formed takes it out. What are we doing? Displacing down. Where do we look for? This old low. What does price do? Comes down, sweeps it, shows a lot of rejection from it. Where my new looks at this new high. Let's see what happens. Okay, and what does price do? Comes straight up to this high, takes it out, as well as taking this old high out. So see what happens in the next few candles. We displace right through it. So I have a feeling and can anticipate that we are going to continue. But what did we just do? We also took out this very high resistance high. Go over that in another video, but and we keep moving up. So liquidity sweep, and then these all got ran through because from here, this is all very low resistance liquidity that got taken out, so it is more likely to just run through it. Let's go to another example. Okay, here we are with our next example. As you can see, price got built up in a range right here. Takes out this high. See what happens next. I am anticipating for price to move down to this low. And there we go. Move down to this low. We get some rejection from this low right here, so we can see what happens next. Okay, and just like that, we have a huge displacing candle up after the sweep. So let's enter right here. Just see what happens targeting this old high. And then we can put our stop at this right here. I aim for a 1 to 2 RR all the time, so I'm going to put my TP just a little higher. If it doesn't hit, it's okay. See what happens. And TP is hit just like that. So the reason this worked is because first we took out this right here. We saw some displacement up, and then we saw huge bearish candles that came down from it. So that gave me a signal that it was more than likely going to be a liquidity sweep because of the rejection we saw out of it. The main thing with liquidity sweeps is you want to see rejection from it before entering. Price came down here. I was anticipating for price to come down to this low right here. What did it do? Came down to the low. Waited for some rejection and reversal signs. I saw this huge engulfing bullish candle, and the second one also having an inversion of this fair value gap right here gave me another great signal. Entering for a 1 to 2 RR, and TP got absolutely smashed. Okay, here we are with our last example. So let's wait for price to do its thing. Now, if I look over here, we can see that we have this huge low right here that took all of this out. So what I'm going to do is mark that out because that is high resistance liquidity. High resistance liquidity is when its price sweeps previous liquidity and gets left there without getting taken out yet. So this being said, I'm going to look for setup soon. we have this 5-minute fair value gap right here. Wait for it to be inversed before entering, getting some rejection out of it. And just like that, it is inversed. We get a nice little pullback. We can now enter right here, targeting this high. Stop loss right below here. We can put the stop loss just a little lower to get a 1 to 2 R. Let's see how this trade plays out. Just taking a little bit. Okay, and it's hit. So a little big of a trade, but it worked. So I hope this video helped you guys out, understand liquidity sweeps better and where liquidity lies in the market. I will go over more stuff with liquidity when we go over daily profiles, key sessions, kill zones, all those good stuff. So I hope you guys have a good rest of your day, and I'll see you in the next video.